active the M&A market's been, these last few years, this year in particular, I think there's a lot of, potential sellers, potential partners out there that have been wondering, asking us, just what is driving value? What do we see as important? And obviously, the first thing first is, getting your own house in order, just having things cleaned up, ready to go, make it clean and easy to work with. And beyond that, there's the quantitative factors. There's what's your organic growth rate? What is your team's operating leverage? So, just how much can your team help growth in the future, not just what it's done historically. Obviously, then there's the client demographics. There's the kind of team geography. And, for us in particular, any unique capabilities that your team might be able to bring in, add to the Savant soup, if you will, to add a new spice and add some creativity to the team. So it's really not just about, what you've done, but I think for the right seller, the right partner, it's where we're going together. I think one of the really underlooked areas for partners and sellers that we work with, at least before we have the discussion, is just how a potential buyer's capital structure can impact their future. And really, there's two components. There's the equity piece. Who owns the equity of the firm? Is it employee owned? Is it private equity involved? Is there a family office involved? All those have different degrees, different timelines that'll impact really the incentives of the owners of the firm. We're majority employee owned, which we like to think, therefore the owners of the firm are fiduciaries to the end client versus potentially being a fiduciary to some outside investor, which is important in its own right, but not necessarily for our clients. And then the other component is debt on the balance sheet. There's a wide variety in our industry of very conservative firms, and then some that are a little bit more aggressive when it comes to the debt. And they might be, 4, 5, 6, 7 times their EBITDA as far as leverage. And when you start to get over leverage, it's a little risky in that, can you invest in the right people, processes, technology to really drive the client experience going forward? So we think it's important for sellers to take that holistic view on what the cap structure looks like as far as who's invested in the firm, and then what risks are they taking? What are their motivations looking forward? When sellers or partners come to us, I think one of the main things we see is they care about their team that they've worked with for years, potentially decades. And then, of course, their clients, who a lot of times are not only family members, but have become really good friends. And so what happens to them after the deal really starts before in the discussions, and how they might evaluate what potential services does this new partner bring? What value add does the new partner bring for clients? Are there new resources as far as team members, whether it's estate planning, advanced planning, taxes, whatnot on that front? And then for the team, it's just as important. It's the organization you're looking to join, investing in their people, looking to grow their own talent and really promote from within, because that's where, if you're joining the right growing organization, your team members might have the opportunity to do something that they've always wanted to do, but there just isn't the need for in a smaller firm, where they may wear 7, 8, 9 different hats today in your organization. Maybe 4 of them, don't even look good on them, to extend the metaphor, and maybe there's 2 others that they don't like. But if they find the right intersection of what they're passionate at, what they're skilled at, and the buyer's platform's needs, that's where you really can see the magic and accelerate your employees' careers and their opportunities, both economically and professionally.